Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about the top 5 dividend stocks. Make sure you stick to the end of the video for my opinion on these stocks. So the great thing about dividend stocks is that just by being a shareholder, you get a dividend payout. First stock is Johnson JNJ, ticker symbol JNJ, currently priced at $142 per share. And past year up 0.69%, past 5 years up 44%. So capital appreciation isn't big, but their dividend yield is solid. Taking a look at the market cap, $374 billion. P ratio is 22, and dividend yield is 2.72%. In terms of analyst ratings, 65% give it a buy, 30% give it a hold, and 5% give it a sell. So J&J, they're a holdings company primarily in the healthcare space, and they operate in the consumer segment, pharmaceutical and medical devices. And they've been very steadily growing year over year in terms of their financials. And it's not a high-flying growth stock, but it's one of those steady healthcare staples that a lot of people have in their portfolios. I think this is a great dividend stock to hold in the long term. Next is Procter Gamble, ticker symbol PG, currently priced at $115 per share. Past year up 4.19%. Past 5 years up 49%. So it's not big on capital appreciation either, but they have a very solid dividend yield. Market cap is $286 billion. P ratio is 65, and dividend yield is 2.62%. Analysts ratings, 59% give it a buy, 36% give it a hold, and 5% give it a sell. So Procter & Gamble is also a very solid consumer staples company. They have a lot of brand names in the consumer packaged goods space, including in the beauty, grooming, healthcare, fabric and home care, baby products, feminine and family care. So if you look around in your house, you'll probably have a lot of Procter & Gamble products, and it's one of those consumer staples companies. So during good times, people will buy these products. During bad times, people will still need to buy these products because they are consumer staples. Next is TSM, Taiwan Semiconductor Manufacturing Company, ticker symbol TSM, currently priced at $55 per share. Past year up 43%. Past 5 years up 142%. So capital appreciation is pretty solid, and they also pay a solid dividend yield. So market cap is $290 billion. P ratio is 22, and dividend yield is 3.45%. In terms of analyst ratings, 65% give it a buy, 29% give it a hold, and 6% give it a sell. So this company, what they do is they engage in manufacturing and sale of integrated circuits and wafer semiconductor devices. So a lot of companies go to them to manufacture the chipsets, the semiconductor chips, and it's one of the largest in the space. And I see them steadily increasing the dividend as well as capital appreciation. Next is the Home Depot, which is in the home improvement space, ticker symbol HD. Currently priced at $242 per share. Past year up 20%. Past 5 years up 120%. So it's definitely a more cyclical stock, but when people need to improve on their home, people come to Home Depot to buy the products. Market cap is $260 billion. P ratio is 24, and dividend yield is 2.3%. 65% give it a buy, 32% give it a hold, and 3% give it a sell in terms of analyst ratings. So as I mentioned, they're in the sale of building materials and home improvement products, and it's pretty much a duopoly between Home Depot and Lowe's. Home Depot being larger in this space and have been around longer. They pay a very solid dividend yield, and as I mentioned, it's more cyclical. It'll be more volatile than consumer staples. This is another good dividend stock to hold. Last but not least is Microsoft, ticker symbol MSFT, currently priced at $188 per share. past year up 42%, past 5 years up 306%. Market cap is $1.42 trillion, so it's one of the 3 companies in the $1 trillion market cap. P ratio is 31, and dividend yield is 1.06%. In terms of analyst ratings, 88% give it a buy, 12% give it a hold, and 0% give it sell. So very solid, strong buy rating. Microsoft, you probably know what they do, but they're in the enterprise solution space, so they support software, services, devices, and solutions, primarily in productivity and business processes, intelligent cloud, and more personal computing. So I see that their intelligent cloud space is a high growth segment just because more and more people are in cloud computing, and Microsoft it takes a large piece of the market share alongside with AWS from Amazon and Google. So Microsoft is big in this space, and whenever people use PCs, they use Windows products, whether it's the Office Suite or Windows or Office 365. Also in gaming, they're in a lot of the productivity and cloud space. So very solid capital appreciation as well as solid dividend yield. So overall, I think these stocks are solid buys. So Johnson JNJ, Procter Gamble, Taiwan Semiconductor Manufacturing Company, Home Depot, Microsoft, all these are solid dividend stocks to buy. Some have more growth, some have higher dividend yield, but overall, they pay a very steady dividend. So consider that a good passive income when you're just holding these stocks. That's all for this video. What are your thoughts on these stocks? Comment down below. I'm going to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.